And it looks like we are live, guys. Welcome to the Startup Tank Climate Investor Pitch Show, the show where we get our our dragons, our sharks on to highlight some incredible climate technologies out there. So if this is your first time, you haven't checked us out, thestartuptank.com. We do this every 2 weeks. My name's Matt Ward. I'm your host, and I'm also founding partner of 4WARD.VC and our partner in Clime Accelerator. If you're interested in learning more about how acceleration can be and the future of climate tech, check us out at 4WARD.VC, the number 4WARD.VC. We've got a bunch of free resources on there. So in addition to doing this every 2 weeks to get some of these incredible companies some exposure, we've got a database of 900 plus funds, incubators, accelerators, and CVCs focused exclusively on climate and clean tech. You can filter by stage sector, geography, and check size, find your ideal investor. That's all at 4WARD.VC. We've also got partners, programs for corporates, programs for consultants, universities, et cetera, to help you hit your sustainability goals by sending the awesome climate and clean tech solutions your way. We call it networked growth hacking, and we thread the needle on getting the solutions in the hands of the folks who actually need them, industry. And that's what we're doing here today. Today, I'm joined by 3 incredible investors. I will give them a chance to introduce themselves in a sec. But first, the Startup Tank, we're going to have 6 companies on, assuming they all show up. That's always a question with founders. And then we're going to have a startup of the night. At the end, every company gets 5 minutes to pitch, followed by about 5 to 15 minutes of Q&A. At the end, we'll vote on who we see as the most promising climate startup of the night, and they'll be awarded with all of the honor and glory, which dies eternal, so to speak. So for us, 4WARD.VC, we run our early stage accelerator, pre-seed and seed companies, Europe, North America, and Israel. And we focus very much on the growth and sales, helping companies land serious customers, clients, pilots, and traction. You can find out more about us at 4WARD.VC. Check out our climate techies community of 2,000 plus, and a lot of other free resources that we have to connect and make the climate ecosystem work. And today I'm joined by 3 other incredible panelists. I'd hand things over first to Manuel. You want to share a little bit more about what you guys are doing at Greencode?
Thank you, Matt. So, hi, my name is Manuel. I'm a venture partner at Greencode Ventures. We are a Finnish early-stage green transition fund focusing on digital-first solutions in the areas of energy, mobility, building, and industry. We love industry. I'm personally have been a founder and COO of Ecochi, which is an IoT operating system for electric vehicle charging stations. So, yeah. Looking forward to the great pitches, and thanks for having me.
Absolutely. Thanks for coming on. And Schaffer, Climate Capital, take it away.
Awesome. Thanks, Matt. So Climate Capital is a pre-seed to Series A climate-focused investing firm. We do hardware, software, carbon accounting, carbon capture, crazy stuff like nuclear fusion to battery science. We invest mostly in the US, although we have investments in Europe, South America, and Africa.
And then last but absolutely not least, Jinna. Jinna's joined the team with 4WARD. Do you want to share a little bit more about what you're doing in your background, Jinna?
Yeah. Hi, everybody. Very glad to be here. I'm a private angel investor and very happy to be on the team also at 4WARD.VC. Previously, I had my own reusable packaging startup operating in the Benelux. And prior to that, more traditional consulting background.
And now Jinna is supporting us with our hands-on accelerator, really allowing us to help the companies grow and scale, invest in the best and brightest. Again, you can find out more at 4WARD.VC, but I don't want to take up too much of your valuable time or that of the founders that we've got on today. So to kick things off, I would hand the ball over to Maddie with Boulder and see if she could be a little bit more bold in sharing the vision they have. Maddie, you've got 5 minutes on the clock with a hard stop, and then a round of Q&A with our investors. Sound good?
Yeah, sounds good. Matt, should I share my screen?
Yeah, go for it. It should work.
Yeah.
And then just let me know when you're ready.
And it would be great if you let me know if you see my screen.
Looking good. Take it away.
All right, everybody. Hi. So at Boulder, we're building connected hardware and software that empowers users to reduce their energy bills and on the flip side, balance the energy grid. The reason we entered this business is because we saw the home energy landscape is rapidly changing. Some stats for you. At the moment, 70% of the total household energy bill comes from heating and cooling. Over the past year, European households have seen an increase in energy bills by 64% on average. And I think the biggest one is that over the next 10 years, gas is set to be phased out in favor of sustainable electric solutions, which brings us to our ethos, which is if we could say no to gas today and switch to sustainable electric heating, we would. But existing electric solutions are expensive to install and are not suitable for all homes. So take heat pumps, for an example. Really great products. We love them, but they're an incredibly huge upfront costs, upward of $20,000 for an average home. It takes 4 to 6 months to even install this. And I think the biggest kicker is that something like 50% of homes in Europe and the UK are not even suitable for heat pumps due to zoning, coding, ownership structures, and so on. So with that in mind, at Boulder, we produce products that are easy to install, affordable, energy saving, and IoT capable with a focus on home climate. All of our products are underpinned by our energy efficiency as a service platform that reduces consumption and automates climate management. We've launched in September with some freemium features, which really help users to reduce their energy consumption and stay on top of their bills, boost convenience, automate home climate. But we also have paid premium features in the pipeline for both enterprise and users. We really view our hardware as a Trojan horse in the home electrification space. Kelvin is our flagship product. It's an infrared heater, which is 30% more cost efficient than traditional convection methods on heating technology alone. It's smart home capable out of the box, wireless thermostat included, and there's no installation. So it's DIY, 3 minutes, and no maintenance costs. Everything kind of pushed over the firmware and software. We're also launching now Clime. It's a smart controller that transforms your existing air conditioners or air-to-air heat pumps and turns them into smart home devices. It allows you to control your AC from the comfort of your phone, track energy consumption, reduce bills with a range of smart features, and all for just $150 with zero wiring and setup in minutes. We're super excited about this because with Clime, we can go after 2 billion existing air conditioners in the market, super energy guzzling devices, and predicted to be something like 5 billion air conditioners over the next 5 years. And improve their energy efficiency and balance the grid. In terms of the company business model, we started off with unit sales. We're now adding our energy efficiency as a service model, which is our way of saying SaaS, not super catchy, but it's essentially monetizing our users and enterprise clients, opening up our platform to other heating and cooling manufacturers. And where we could see our company going in the future is actually expanding beyond home climate into home batteries, solar, and really creating this API middle layer for IoT devices in the home, with the end goal of establishing the home as a fully managed distributed energy resource in the grid. Now, in terms of some traction, our early customers do love our products. Since starting sales 7 months ago in September, we've shipped over 4,000 products worldwide. We have partnerships with online retailers selling our products in 15 countries, and our average consumer rating for our products has been 4.7 stars. And that's really backed with some of the early revenue growth we've had. For the past 7 months, we've generated $500,000 in revenue, and we are on track to hit 3 million by the end of year 1. Now, we do have a company philosophy to have 75 to 80% gross profit margins on all of our hardware products.
1 minute warning.
To allow for an effective go-to-market strategy. And so we did start across D2C. That's where 90% of our sales were generated over the past 7 months. And now we are unlocking B2B2C partnerships across traditional installers, solar panel and home battery installers, energy companies, and we have traction and some early contracts across all 3 verticals. So a little bit about the team. I'm the CEO. My name is Maddie. My co-founder is Toma. We've known each other for over 20 years. We met at school, an American school in London, where we learned English together. Our background comes from marketing, finance, IoT, product development, contract manufacturing, and the early team that we've built out is really to support the early growth that we've had across logistics, development, customer success, marketing. And we do have an incredibly high energy list of advisors. We were part of Techstars from September to December last year, and we've added a few incredible advisors across.
And your time is up. What are you looking for?
All right, we're looking for $1 million. We're 60% committed with the lead in place. And our lead is a US fund led by ex-Tesla and SpaceX execs focusing on climate tech. Thank you very much.
And while I'm pulling in the other investors, what motivated you to do this? What's your big why?
Why we started the company?
No, why you started the company.
Oh, why I started the company? Listen, we actually broke off, both myself and my co-founder, Toma. We worked at an IoT and materials company prior to Boulder. We saw an incredible opportunity. We saw a really massive market and a changing landscape. And really, I mean, all of our products, every single product that we've launched is about empowering users to reduce their energy consumption and yeah, battling the climate change.
Awesome. Do you want to take things away first, Schaffer?
Sure thing. Thanks for the presentation. Question on how many of these devices does like a, I don't know, 3,000, 4,000. Well, I guess first, are you going towards like apartments? So like 1 or 2 bedroom apartments, or are you more single family homes? And if it's single family homes, how many, kelvins does a home need? And then are you helping provide financing?
Sure. So Kelvin is just for other people in the call, is our infrared heater. So for an average 100 square meter home, it costs something along the lines of $3,000 to $4,000 to outfit your whole full home. Now, we've seen customers outfit full homes. We've seen customers just do their extension or, just power like kind of the home office where the heating is not just right, which is in contrast to like heat pumps, which I think for a 100 square meter house, it would be something like $30,000. And sorry, did I answer your question, or was there something I missed?
So your device, the Kelvin would cost the consumer 30,000. Are you providing
3,000? Yeah, 3,000.
3,000. Are you still providing financing for them?
Personally, we're not, but we do partner with some companies like Klarna, where you buy now, pay later, and in the future across the B2B2C partnerships like solar panel and home battery installers, where we provide a direct complementary product to their existing products and increase the lifetime value of their existing customers, but also bundle our products for kind of top line revenue. There they have, typically the client will have financing. They're at the stage where they're looking to increase the energy efficiency of their homes. So it's like a really great partnership, and we're seeing great traction there as well.
Are you worried that Klarna is buy now and unable to pay later?
We've not really seen that kind of we've not really seen that issue. We have pretty much no delinquency issues at the moment.
Well, to that note, how quickly does it take to pay off the device? Like how long does it take for the consumers to save on their energy bill to get the 3,000 back?
So it's a great question. I think it's very, very different for every single customer. It depends what they're currently on, what they're upgrading from, whether it's gas heating or electric heating or heat pumps or whatnot. So it varies, again, depends on insulation levels and so on. But if we take a standard, hey, I have an electric heater and I'm upgrading to this infrared electric heater, then it's on heating technology alone, it's 30% more efficient. And then depending on the use of your smart functionality, you can save an additional 30% on your energy bills. So really, it's quite a big impact.
So does it even make sense for like condominiums and apartments? Any use cases there, or is it always in a house?
No, definitely. We've seen people outfit their apartments, homes. In fact, I think it makes even more sense for apartments because everybody's electrifying their heating systems right now. Like gas is being phased out. Landlords will not be able to rent out in the next 5 years in the UK, for example, if they don't electrify their homes. So, but heat pumps, which is the solution, which is incredible, but is not compatible with in the ways that we currently live, like London, Berlin, Madrid, Paris. You have all these apartment blocks, and heat pumps are just a nightmare, an absolute logistical nightmare. You can't install them. So apartments are a great solution for Kelvin.
How do you see it in comparison when you have cities like Berlin or Munich that have central heating systems? So where basically every apartment is connected to, yes, it's gas-based, yes, it's water, steam-based or whatever, but what is really the case for me there to switch to electric heating?
Well, landlords will be forced into it over the next 10 years. It's obviously being pushed really hard on regulation. So then it becomes a question of, landlords will always try to do what is the cheapest solution for me to increase the energy efficiency of the home. What is the absolute cheapest and quickest way for me to do this? And whilst heat pumps are incredibly effective and efficient solution, the upfront cost is so high, and the lifetime value, if you stack up our Kelvin system across a heat pump with the upfront cost and maintenance cost for a heat pump, what we're seeing is a break-even cost, lifetime value for a heat pump against a Kelvin. So and typically,
what is your break even? What's your payback period?
No. So it's not really a payback period. Again, it's more to do with what is the cost of running a system for a period of 20 years, which is typically what people would buy their heating system for, 20 years plus. So you take a 20-year period, you kind of look at the upfront cost of a heat pump, the maintenance cost, the running costs, and then you stack it up against the super low upfront cost, slightly higher running costs, and over 20-year period, it's the break even.
Regarding the running cost, oh, sorry, go ahead.
Yeah, I mean, it's electrification of the home is a big topic. So yeah, it's very pertinent what you're working on. But what I'm kind of trying to wrap my head around is what's the difference between your heater and like a space heater?
So first of all, I guess there's two things. There's two benefits to Kelvin. And by the way, it's not the only product we have. We're launching Clime as well. It's but I think everybody probably understands what that is. But Kelvin, infrared heating, I think the closest way to describe it is, outside bars, you'll sometimes see those red filaments that heat you directly. And whilst the air temperature is quite cold outside, you feel nice and comfortable. So this is like an adapted version for the home. It heats you directly, which allows you to turn down your thermostat a few degrees and feel the same level of comfort as you would with a traditional space heater. And with every single degree you turn down your thermostat, you save up to 13% on your energy bill, monthly energy bill. So that's on the heating technology. Plus, we have the embedded software, which has a range of energy saving features, which allow you to waste less energy. And that typically helps you save an additional 30% with the correct usage.
Can we also talk about Clime? And the first question that comes to my mind is, why did you build Clime?
So we've had a lot of
Kelvin is so awesome.
Okay, thanks. Yeah, I appreciate that. So I think it's because we see that heat pumps, air-to-air heat pumps and air conditioning is, I think it accounts for 10% of global energy usage. It's a really, really big chunk. They're huge energy guzzlers. In California, for example, at 4 p.m., everybody switches on their ACs, the sun is blasting, and the energy grid starts being overloaded. They literally text people and say there's going to be a blackout. So they have rolling blackouts in California today happening all the time. And so what we thought, wouldn't it be a great idea is if we attached ourselves to a super energy guzzling device, help consumers reduce their energy consumption through all these software that we can build out, right? But on the flip side, connect with the energy providers and energy utility companies and allow them to have that granular data and access and control to be like, well, let's turn down the cooling in 10,000 guest bedrooms that are unoccupied at the moment for the next 10 minutes and balance the grid so that there's no blackouts, so that people, there's a huge benefit both to the consumer and the stability of the grid.
How do you see your competition there?
So we do have some competitors in the space, besides some design and feature improvements. Where we see our competitive advantage is that most of these smart home devices, they don't focus on grid connectivity. They don't focus on connectivity with the energy companies for, I don't know, real-time energy tariffs or grid balancing. So I think that's one of our biggest differentiators to the majority of our competitors. And we really see that, you know, for a home to be truly smart, to be truly smart and connected, we view it as connectivity to the grid to be super imperative.
Did you ever look at a company called Tado?
Tado is perhaps our biggest competitor. It's the main competitor based out of Germany.
And you know, they have a shitload of money, and they are in the market for what, 15 years or something like that?
Yes.
How do you want to compete with that?
They are the closest competitor. It's a really great company. We've spoken to one of their co-founders who's left the company to be one of our advisors. And
is he?
No, not yet. I mean, we're in talks. We'll see. I'll say this: the majority of their products are focused on gas and gas central heating. So TRVs, I think that's where 90% of their revenue comes from. So they're kind of focused, at least the majority of their focus has been on legacy systems which are being phased out. And only now, right now, are they focusing on grid connectivity. On our side, from day one, we're focused on grid connectivity, and we're focused on electric products first. That's number two. And number three, we actually offer hardware which serves a primary function, things like heating or cooling. Tado does not do that. Tado focuses on controls, something that we do have as well, but they don't actually offer any products in kind of that serve a primary function.
Can you talk to us a little bit about your like cost and unit economics and things like that?
Sure. So we always aim for 75 to 80% gross profit margin, which means, you know, cost of goods landed times 5, and that's what we retail at. And we've had a really great season of selling our smart heating products, and now we're about to launch Clime. Yeah, really excited about that.
And we're really excited too. I want to move things on though, because we've got so many companies. I want to make sure everyone has a chance to pitch. Maddie, Boulder, thanks for pitching. I'm sure people know where to find you, and I'm sure you will have people reaching out.
Super.
Next,
thank you.
Next, I'd love to hand things over to Alex, and let's get concrete about reducing the consumption or reducing the emissions a bit of the built world. How does that sound?
Good, thanks. Can you see my screen, everyone?
We got your screen. You are
Excellent.
There. Tell us what you're doing. Let's see the new world of AI with concrete.
Yeah. So, hi everyone. Alex Hall, concrete.ai. We actually spun off from the Institute of Carbon Management at UCLA, and we are looking at optimizing concrete. So why? Well, massive market, really exciting space, second most consumed product in the world, growing at least 5% a year. However, traditional design methodologies for concrete are super inefficient and wasteful. The worst part about concrete, directly responsible for roughly 3.2 billion tons of CO2 every year. Before we get into the detail, a little bit about concrete. So concrete is typically a mix of a whole lot of different ingredients, all of which are commodities. Probably the most important one is on the top left there. It's cementitious. So typically cement, ordinary Portland cement, but other substitutes as well, fly ash and slagment come into this as well. The important thing, concrete's sold by volume, but manufactured by mass. And when we look at this part from a cost perspective, we can see that typically, on average, the cementitious component is roughly 50% of the cost. For those in Europe that work in metric, $76, it works out to roughly €100, $100 a cubic meter. But really importantly, from an environmental impact perspective, it's responsible, cement on its own, for almost 95% of the CO2 associated with concrete. So what is the solution? Well, we think generative AI really allows for some really significant opportunities. One is a major cost reduction, but really importantly, a significant CO2 reduction opportunity at the same time. We can enhance formulation design, typically by around 30% productivity increase, and help folks optimize the supply chain. All at the same time, never compromising on the design engineering requirements that we're looking for from concrete. This is fundamentally what we do. Concrete.ai has three key elements to it. The first are numerous sets of models. Some are generative, some are just neural networks. The generative ones typically are the ones that actually prescribe new formulations that are either cost or CO2 efficient or a combination of the two. The neurals actually give you an output that really predicts the true performance with an obvious degree of error within that, which we modeled into the target as well. Concurrently, we catalog and curate all the data that is generated by the producer. So we're seeing the actual batches that come back from the plant, as well as formulation numbers, and then get to use these for continuous improvement. Finally, a huge thing we're actually able to do for a producer as well is generate what's known as an EPD, Environmental Product Declaration, that actually allows us to validate the CO2 savings and potentially monetize that for them as well. Looking at the US market, I think what you can see, pretty significant market on its own. Very clearly, India and China are significantly bigger than the US. That being said, extremely tight margin business. So what is the real value that concrete.ai ultimately brings to the producer? From an economic perspective, is that we can, through the material cost savings and employee productivity, typically generate anywhere from a 2 to 5% positive EBITDA. That ultimately can translate into a 2x EBIT benefit. And over time, we're actually going to be able to start generating some pretty significant CO2 revenue for them through optimization of CO2. The supply chain enhancement obviously comes once we've got a lot more data, but this allows them to really pick and choose the best supply opportunities for them for their entire plant portfolio. As far as the revenue models are concerned, we're currently running with two. The first is a shared savings, so effectively no risk to the client. The client goes out, we help them optimize the mix. The actual mix you're seeing here is a real life example. And in a case like this, we would recover typically $2 a cubic yard from them. After a year of this model, we figure
1
out
minute warning.
Certainly, and we convert to a full subscription model, which is exactly what our second model is. Similarly, same thing on the CO2 side of things. Pretty decent traction already up and running with a commercial producer that's got a headquarter in Brazil, based in Chicago. Just started a pilot with them in Toronto. In negotiation with 3 other producers. We have property developers and significant milestones achieved, not only in terms of licensing, but in terms of patents as well. A pretty decent team that we finalized right now. This is the C team that's helped us get to market at this point in time. Very deep industry knowledge, not only in the production and manufacture of ready mix, but in the software side, actual AI expertise, material science, and very clearly on the low carbon focus. That's truly what it's all about for us at the end of the day, is legacy. So what are we looking to do? We did raise a pre-seed last year. We are now into the commercialization process, looking at $3.3 million worth of, in terms of
time is up.
Okay.
Quickly wrap that part up while we bring in the other panelists.
Yeah, no problem. So 2 key elements within the further escalation of the business. The most important thing is for us to be able to scale and provide a seamless integration to all these different systems. There's 3 additional systems that we need to incorporate into our APIs. Those are Command, System, and Stonemont. These are the 3 biggest ones that we don't have already in our portfolio. And then obviously it's a very personal business, Concrete. So what we're looking to do is actually have these 3 additional markets, have people in those markets to provide the immediate facility to them, because these are typically the biggest markets in the US.
And then one question before I hand things over to the panelists. You said this is the seed team, or you had some strange qualifier about the team, and I was curious what the status of the team is and what that meant.
So one of the things we did with the pre-seed is that we identified that one of the things that we wanted to have in place going into the seed round, so when we began commercialization, is we had to have not only somewhere with a deep software engineering understanding on board, but also someone that had very, very strong background in terms of understanding optimization from a carbon and a carbon commoditization perspective. Mm-hmm. So that is Ryan Henkin-Sefkin, our VP of Business Development, that we brought in. Deep industry experience on actually the chemical admixture as well as the concrete design side. And then David Wegman's our VP of software. And David brings a whole deep range of experience from the software development side, not only the back end and front end, but really strong on the UX side. And that's been really key to us actually getting the traction and getting clients in. So that's what we wanted to do, is build up that team, have the software ready. And so 3 things we wanted to ultimately come out, 4 things we wanted to get out of our pre-seed was complete 4 pilots, which we did, get those 2 key roles in place that help us develop the actual software, build the software, get to an MVP, get the license agreement in place from UCLA, and then finally get the patent process rolling. So we obviously did the initial submission last year, and it is now pending based on the final submission made in May.
And what's the biggest weakness on your team that's left?
I think one of the realities is we just, like I said, and one of the things we need to address now is that we need more boots on the ground in terms of actually being able to get in front of more clients. That's a real challenge. Concrete's a very personal business. You wouldn't think so because of the size of it, but it's extremely local, and people need to be deeply aware of local market conditions. So if you're not there and you're not able to provide a level of service, it becomes a real challenge. The other reality is that David on the software side of things has got multiple builds to continue to do on the API side, and that's the other huge element we're looking for, is to get those skill sets in on the developer side.
Awesome. Thanks. Do you want to take it away, Jinna?
Yeah, I totally agree with you that concrete is a very personal business. And I was in Toronto for 7-8 years, and I know that there in the market is like 4 concrete pourers and the end. That's the size of the market. So so I thought it was quite impressive that you can have a 8 to 70% reduction of CO2. Can you share a little more about in what kind of case would you get 70% reduction?
Yeah, so what we're actually finding is that there are many cases where producers are looking at things like high early strength concrete, and would typically look at just a 100% ordinary Portland cement, with the anticipation that that's actually going to be the only methodology that they're going to get to, say, 3,500 psi, or let's in metric, roughly, let's say 30 megapascals in 24 hours or 20 hours, as may be the case. And what we've been able to do by bringing our solution to the table is to actually demonstrate that there are actually some cement replacements that you can put into play, which obviously is the biggest opportunity in terms of CO2 reduction. But additionally, some really interesting different chemical admixture components that we could bring in that actually really enhance the early strength and allow you to bring the total cementitious quantity down.
Okay, thank you.
Certainly.
Alex, thanks for the presentation. Either yourself or someone else on the team who has like deep experience selling into the concrete industry.
Yeah, so I was in the concrete business for 25 years. I actually crossed over from the dark side. So part of my motivation for being in this business is not only understanding what's a tangible application of AI and how can we actually use it, but for me there's a huge legacy reality here in terms of carbon management and in terms of what we can really do. And I think from our perspective, our philosophy is let's find a way of doing as little harm as possible up front and help producers not only make their process more efficient, but also help them save money. And I love that analogy. I know people kind of shoot effective altruism down sometimes, but doing good by doing well, it really can happen. And I think this is a true example of that.
And then you mentioned licensing agreement with UCLA, but I think you just filed your first patent. Will the company own the patent, or will there be a share? Okay. And then can you walk us through the licensing? Do they have equity in the company?
They do.
Revenue share?
Yes, they do. Obviously, there's NDA components to the agreement. What I can tell you though is it's not a very big position. The reality is the elements that we actually licensed are primarily around the software elements, not around the AI elements at all. The AI is the elements that we've gone into the patent, and that's the difference. They do have a small equity position, but there's no revenue component.
Alex, simple question that I'm struggling a little bit. Who is your customer?
So we actually have 2 customers at the moment. I'll get to our first customer in a second, but our primary customer and our core focus are ready-mix producers. So ready-mix concrete producers across the globe There are a couple that you find across the world: Wholesome, Cemex, Heidelberg Materials, CRH. These are all typically big vertically integrated companies. But for example, in the US, even the biggest concrete producer has roughly a 5% market share. So it's a seriously fragmented industry. We do have a sweet spot in terms of the type of producer we actually look for, based on where we are in the business. But where we actually look for are people that are actually making the product and then selling it to what are typically concrete contractors, not the general contractors. The general contractors will actually subcontract that work out to a concrete contractor, and they will purchase it from the ready mix producer. And then I know I didn't spend enough time on that slide, but there's roughly 6,000 plants in the US that supply all these different concrete formulations. Because all the individual ingredients are commodities, what you find is that the actual opportunity to have the same mix at the same location doesn't exist. The big differentiator between the ingredients ultimately is the cost of distribution, and that obviously also has an impact on the amount of embodied carbon associated with the product. So this is a key element for us, because it's actually a really tough business to apply AI to, because there's so many variables. Yes, we all know you can model AI to n dimensions, but given the amount of variables, it is a really tough thing to do. So for us, that's been something that's been worked on for the better part of 7 years. We have about 1.2 million data sets, which is by far the biggest number of data sets that are out there. And just so for reference, so I can be clear, a data set is a combination of all the chemical, physical, environmental impact ingredients that have to do with those raw materials. A typical plant will have anything from 15 to 20, 30 different types of raw materials at that plant. So once you've got all those ingredients, you then have a recipe, right? You put the recipe together, and that recipe is now going to give you engineering output. That's going to have typically around 28-day compressive strength is the key element that they're looking for, but also what's known as workability, or the slump of the material while it's still in a wet or elastic state, elastic state. And then finally, the last thing you have is a reference point, and that reference point is actually a test point. So it's 1.2 million data sets, but it's tens of millions of data points that you actually have to get and pull together and do the modeling. So very fortunately for us, a lot of the work was done at UCLA with a pretty significant team of engineering and material science students. And a lot of the work, like I said, it's been like 7 years in the making. Work done with Federal Highways Association. A lot of the pilots have been done with some of the largest ready-mix producers in the US.
And if I may continue on that, so that's kind of your customer group, but who is driving it? Who is driving your customer to use a CO2 neutral concrete or CO2 reduced concrete? CO2
reduced. So that's a great question. The reality is that the market demand is not there, but it's increasing. So if you have a look at the demand for low carbon concrete in the US, at best estimates, it was roughly 2.5% of the entire market last year, which was up from about 1.8 the year before. So what we're starting to see is a slow uptick in the demand for CO2, which is really going to ultimately favor us in terms of where we want to go. But it's still in its infancy, absolutely. What is interesting
would you see any other regions that they're particularly thinking of Europe, European VC,
100%.
but is it driven more by regulation in the EU? But also the EPA is going crazy, or I think going on the right path, but that's my personal opinion.
So let me answer your first question. Europe is always going to be more attractive because you have carbon taxes, and as a consequence of having carbon taxes, the value of a carbon credit is much higher. So regulated credits are trading just under €90 currently. In California, we're lucky. I think we see $29.26 at the moment for a regulated credit. Bear in mind, not every credit that we generate would be able to be traded on a regulated market, because the cost savings are that much that you're going to fall foul of additionality. But there are many cases, and we have a second customer set that actually there's a company that was on my slides, Compass Data Centers, were actually our first customer. So what they use us for is to understand how to bring their embodied CO2 content of their concrete on their existing data centers down. And that's a pretty interesting move, because think about any company that's got a net zero target, right? They've got to think of those scope 3 emissions and what that represents in the future. So fundamentally, it becomes a very simple arbitrage, right? Mm-hmm. What is the cost of a removal credit going to be in 2030 or 2035 or whenever my net zero date is, versus what is the cost of, or what is the green premium I'm prepared to pay for concrete today? And yeah, so that becomes interesting. And I think it's going to be even more interesting in the future in Europe.
Thank you.
Certainly.
Any last questions? Go ahead, Schaffer.
Yeah, a quick question. So you're, creating new formulas for concrete, or optimizing them.
Yeah.
How much testing needs to be done prior to actually implementing this into a building?
Well, so you've kind of hit on where we ultimately hope this thing goes to, because currently what happens is when you design concrete, you still need to go through a validation process. And that validation process typically takes 28 days, right? So you actually make the mixes in the laboratory, create the molds, and then do destructive testing on them, and then establish what the compressive strength at that point in time is, and at various points in time along the scale. So the reality is, even if we've got to follow that process, the reality is that we can help the person that's actually creating those designs up front. So instead of them taking, 3, 4, 5 hours to actually generate that design, we can help them generate an optimized design, in less than 5 minutes. The human then comes in, and this is what the other cool part about it is. We're not saying the AI says this is what's happening, so this is what has to happen. No, we let the AI do what it does well, which is bring massive computing power to the party, right? What the human does is the human brings judgment. So think of Jenna's earlier comment about Toronto, right? So Toronto, the reality is that I'll go pour concrete in January and it's minus 12 degrees C, but I'll pour concrete in July and it's 35, right? So, who does that adjustment? And that's really where you need the human interface and the human judgment to come into it. So when the design process happens, the human ultimately will always have a last say and sign off on what happens.
Got it. Awesome. Thank you.
Certainly.
Anything else, folks?
I have a question. So sure. There's another concrete kind of AI company, I think called StructurePal. Are you similar in any way, or are you complementary?
No, I'm not familiar with them at all. I can tell you the folks that we see in our market currently, the two ones that are similar to us but pretty different are AIcrete and another company called Geotech Scientific. Geotech's models are very different to ours. They actually have sacrificial sensors that they put into wet concrete and get a whole lot of data results back from them. Great product. I think it's fantastic. From our perspective, there's probably an opportunity for us to align with them in the future. But the reality is that we're a lot happier with the way we go about our design and what the output of the design looks like, because what we're actually using is data from our producers' suppliers that they're required to provide them by law. So these, the data that exists, we're pretty confident in the quality about that. The other company is a company called AIcrete. Really love what they're doing as well, but they very much focused on getting raw materials in and actually doing the testing themselves of the material, validating that and getting it out. Again, we from a philosophical perspective, we don't. For us, that's not the right way to go, because I ran aggregate and ready mix businesses for 20 years. The one thing I know is that if you go and mine rock, you can literally move 5 meters in a quarry, and there'll be a little bit of a difference in terms of the actual output that you get. The aggregate's roughly 75 to 80% of the mass of concrete, but that product is not manufactured. It's actually processed. So the difference being, if you think about cement, that goes through a kiln, it gets burnt, it gets added, different chemical components get added to it, and then it gets ground and the product comes out at the end. Aggregate is just rock. And the only thing you can do with rock is you can make it smaller. You can never make it bigger. So you crush it, you get it to a certain size, and then you separate it. And the reality is, as ore bodies change, you get different physical performance and physical characteristics out of it. And yeah, so we just think having that kind of information from the producer is the best place to get data. There's no question. I'm not bad-mouthing anyone here. I think our crew got a great team. They've got a great product. We just have a different approach to how we want to do it, and ultimately, the way we supply our solution is also very different as well. We're not about hardware. We're 100% software play.
And that definitely makes it more attractive for investors. I wanna keep things moving, even though I would have questions, but we've got a lot of investors on here, and I want to make sure we keep things moving. So we talked kind of not, whatever. Let's just go to TerraWaste with Ija. They're doing a bit of a circular economy way to bring waste back to life, so to speak, in the economy. Ija, do you want to take things away and share a little bit more about your pretty cool solution?
Yes, absolutely. I mean, a day doesn't pass when I don't talk about TerraWaste, so Right. Do you see the screen okay?
Yes.
Looks good. Take it away.
So hello, everybody. My name is Aya, and I'm the CEO and co-founder of TerraWaste. So basically, what we do at TerraWaste is we are using otherwise non-recyclable plastics and other waste materials to produce a carbon negative oil. So we are living in a world of paradox where we have fossil fuel scarcity, and at the same time there's enormous amounts of plastic waste generated, which means that only 25% of the recycled plastics demand can be fulfilled by 2030, which leaves us with 75% of opportunity for TerraWaste to switch the scales for the better. So that's why TerraWaste has created a solution. We call it HT Loop, which is basically a pressure cooker type of a technology that is converting and upcycling plastics into new circular and carbon negative materials. So how does it work? We are using mixed waste. We are shredding it, then adding water and catalysts and mixing everything together in a special container. After that, we are applying heat and pressure, and then we are boiling the mass for approximately 30 to 45 minutes. And after that, we're separating solid from liquid particles. And as an output material, we are producing synthetic oil, which is basically crude oil, a small amount of char and high value chemicals. The thing that we are most proud of is that we have developed an engineering solution which allows us to reuse heat and water in a loop within the system, that way dramatically decreasing the energy consumption. Also, we have recently partnered up with AWS in terms of automation and simulation. So they are helping us to increase the automation and quality of the processes within the system, and also simulate potential chemical recipes for different types of waste streams in help of their huge database. If we're talking about eternal oil, it is a market of approximately $828 billion, which is sustainable plastics market only. And we have discovered that the oil is high quality enough to be used to produce new type of plastics, which is food grade packaging, automotive industry, and many, many other type of products, basically fossil fuel products. Right. Another very important thing is that for every liter of crude oil that we are producing, we can assign carbon credits, which allows us not only to add an additional revenue stream, but also decarbonize the industry that we are collaborating with. So hence it would be CPG, automotive industry, and oil and gas industry as well. If we're talking about the market, it is enormous, so more than $1 trillion US. But currently we're focusing on recycled plastics market only, which is approximately $77 billion. And if we are narrowing it down to our first pro customers, then we are looking at market potential of 5 billion euros, or a little bit more US dollars. And why we are sure that TerraWaste is going to be a success is that there is another company in the US called Origin Materials, which basically does exactly the same thing with slightly different technology, and they have already signed offtake agreements in the amount of $9 billion US dollars. So that indicates the market readiness for such type of technology and company. What I have to say is that we're not necessarily following their footsteps, but we are trying to do the same thing here in Europe by decarbonizing the industry and collaborating with the biggest companies in
1 minute warning.
Yeah, so recently we did a case study with Mitsubishi headlights, plastics, and it turned out that the eternal oil was 100% stable, sustainable. We produced 85% of yield with 50% less energy than any other technology. But we don't plan to stop there. We are looking at future applications for mixed type of plastics, bio-waste, and ocean waste as well. The future for TerraWaste is as follows. So we're planning to build our first semi-industrial pilot plant by 2025 and break even, therefore becoming profitable by 2027 and reach commercial industrial scale by 2028. This is the team of TerraWaste with more than 20 years of experience in engineering, deep decommercialization, and environmental engineering. And we are also backed by an amazing advisory board, which is connected.
And your time is up. What are you looking for? I gotta be brutal.
Yes, so we're raising 4 million euros right now for a pilot plant building and expansion of the team. So yeah,
Who do you want to hire?
That's actually it.
Who do you want to hire first? What's the biggest weakness on the team?
We look to expand. First of all, we want to hire a chief financial officer to cover us on that end. And on the other hand, we're looking to expand the team with chemists, engineers, and systems engineers to actually bring the expertise in-house. Right.
Take it away, folks.
Please, I'm open to your questions.
Can you walk us through, well, first, thanks for presenting. I think plastic waste is a big issue and a lot of it's not recyclable. So can you walk us through where you're getting your waste and then who are your offtake for the crude oil or your offtake for your products?
Yep, thank you for the question. So we are actually in a very convenient space, I would say, because we have upstream and downstream customers. If we're talking about the upstream, this is where we are getting the waste, then it is CPG companies, automotive industry, medical industries, or basically any other industry that is producing plastic waste within their manufacturing sites. So if you can imagine a company like Unilever or Procter & Gamble, so they have these big production sites where they are packaging up stuff and everything, so they have a lot of plastic waste right there on the spot. So we would actually take this waste off of their hands and recycle it right there on spot. So the first plant would be located right next to the production sites of such companies. That is on one hand. On the other hand, we have, of course, waste management companies that already have collected and separated waste. So in this case, we would be actually purchasing the waste according to the market price. That could be 100, 200 euros or dollars per ton. And then we are profiting from crude oil sales afterwards. And this brings us to the downstream customers, which is oil and gas or petrochemical companies. So such as Sabic, Neste, Shell, BP, and many other oil and gas companies. So they are actually purchasing this oil, refining it, and then introducing it back into the plastic production system.
And you've had conversations with both upstream and downstream, like contracts are in the works?
Yes.
Then what are you missing?
Sorry?
Then what are you missing? It seems like you've got things lined up. There's always a kind of, and whenever it's too good to be true, it's too good to be true.
True, but I would say the thing that is missing is the first pilot plant. We have proven our technology on a lab scale, and these companies are truly interested. But the thing that they are coming back to us is with, yes, this is all great, but can we do it at scale? So that hence we need to build this first plant to actually prove them that it works on scale. Well, larger scale than the laboratory tests. And then after that, we have the agreements with them to actually design and build the plants for them specifically. So we are lacking this first step.
My question is, for example, you do build a plant next to the manufacturer or the CPG brand. Do they have enough waste for the recycling? Like, I would imagine that their processes would be efficient, or I might be completely off.
No, that is a fair question for sure. So if we're talking about mid-sized to large size companies, then they will have more than enough. And we would actually be the ones struggling to build big enough plant to actually deal with the capacity. If we're talking about the smaller companies, then most likely it would have to be a case of having a centralized plant where multiple companies are coming together to actually bring the waste there and recycle it on site, because the beauty of our technology is that it works the best at large scale. So the energy consumption goes down, the quality of the oil goes up, and all of the resources are used more efficiently. Hence, if we're doing that on smaller scale, then it becomes economically unviable. So therefore, even the logistic costs for bringing the waste to the plant would be less than actually building smaller plants and recycling it on site.
And like, how much would an industrial plant cost for one of these adjacent plants, and what would the ROI look like?
If we are talking about the industrial scale that I talked about, the 1,000 liters per hour, it would be approximately 30 to 40 million. But we are looking at revenues of about 70 million in the next few years. So we can get the investment back in approximately 2-3 years, and then it's just pure profit after that. So really, really profitable.
Would you fund that via venture debt? Would you fund that via kind of public banks and markets?
Currently, we're actually exploring multiple possibilities. For the first plant, we are actually looking to raise VC money and some of the grants, local ones, as we are currently operating in Austria and the Netherlands. So we have some support there. If we're talking about the industrial plant, it could be a combination of European funds or even municipal support. Governmental support as subsidies, basically. So that could be one of the potential. If we're talking about the governmental sector. If we were talking about the private one, possibly that could be a joint venture with one of the oil and gas companies.
How is your plant? Oh, go ahead, man.
No, go ahead.
How is your plant powered? Like, where are you getting your energy from? Are you tapping into renewables? Will you have renewables on site? Is there a way to recycle some of the waste heat from your process to power it?
Yes. So first of all, we are reusing heat and water, so that is already decreasing the energy required for the plant once it's up and running. And second is, yes, we're looking to power it with electricity, and more specifically green electricity, to actually keep the carbon footprint really low, as we are aiming for carbon negative footprint, because the technology itself doesn't pollute the environment. And so I would say renewable green energy for the powering of the plant. Also, we have encountered some of the cases where we are able to implement the technology next to a waste recycling facility, and if they have waste heat, we can use that as part of the energy for our plant as well. But that would be a slightly different engineering solution there.
So carbon negative means that basically, despite the fact you run the production process and everything, you take out more CO2 than your whole process and everything
Yes.
needs. Okay, understood. The other question, and maybe I'm struggling because I know too little about it. It's when I look at the distribution of plastic waste. So yes, we produce a lot of plastic, but then the waste, and particularly I think Europeans, but maybe US Americans as well, are really good at like, how you say, relocating the problem. So there is a lot of plastic in the Philippines. There is a lot of plastic anywhere, but it's not here. So we have a scarcity of plastic, but other places have a flood of plastic. And I'm struggling a little bit with that. I understand why it makes sense to put it next to the P&G factory or to the Unilever plant, but ultimately I would see it somewhere where the whole plastic shit is exported by us, or we should prevent it from being exported.
I mean, there are regulations already in place. Like, for example, in the UK, they're not allowed to export waste anymore. It's a different topic within European Union, so they still do cross-border shipments with different types of plastics. But yeah, I would say that more and more plastics is going to be located locally, exactly because of these regulations coming into play. And of course, we are talking about the third world countries as well to actually build plants there. But, you know, we still need to establish ourselves first, and then we can do and deal with the big problem. But that is definitely down the pipeline for sure.
But what is kind of happening, let's say in the near future, and that speaks for you and that speaks for the whole business model, is the fact that we can't get rid of our plastic as a first word so easily to the third word. So kind of we now have to keep our own waste. I think that's a good thing. So we keep it, we have to make something out of it. Okay, interesting. So, and then the question, you mentioned these downstream companies like Neste and Shell, but particularly I'm interested in Neste. You know, we are a Finnish fund. But unfortunately, we're not doing anything in your ballpark, but I think particularly Neste does it. So they would be then a customer of the oil that you produce, and they would use it to build something else.
Yes, we are actually in conversations with them right now. So, you know, fingers crossed, everything goes well.
I cross my fingers.
So thank you. Yeah, definitely. Like, a typical question would be like, there are other companies that are doing this. So they basically are using plastic waste to turn it into fuel, right? And this is one of the, how to say, one of the...
Holy Grail.
Yes, well, not necessarily, but this is one of the things that we would like to prevent, actually, because we are positioning ourselves as a waste to material type of a company. So this goes in line with know your customer ideology, where we actually make sure that the oil that we are selling to these third parties is actually used to make the world more sustainable rather than burn it into energy or fuel, you know, because that's still ignition, and then CO2 is released, right? So we were actually really happy to learn that Neste is one of these companies that is actually using oil to produce also different sorts of materials, not only fuel. And that's why we are very excited to continue these conversations with them.
Alia, we touch base later, and maybe we can help you like pushing them. We can't invest, but maybe they can, and we can push them. Okay.
Thank you, for sure.
It's great great things happening. I wanna move things along though, just to make sure everybody gets their shot. So Asia, thanks so much. Is it Asia or Asia?
Yeah.
I always have to get at least one name wrong. I apologize.
I mean, it's just 4 letters, you know, it happens, no problem.
But still you can get it so wrong.
But still you can get it so wrong. That's the problem with being born in the US. The names are too easy. I want to take a quick break now, folks. If you haven't checked out where the startuptank.com, you can apply there. 4WARD.VC, that's our Accelerator, our partner in Clime program. We've got a database, 900 plus funds, incubators, accelerators, basically all these folks. You can see exactly who's looking for what, find them, and find your ideal investor. And we've got a community called Climate Techies, 2,000 plus in Slack and WhatsApp, where you can network and connect with, well, all these climate techies, investors, founders, etc. All that at 4WARD.VC. And now that's enough of that. Let's get on with making the world a more interesting and better place. How about Svarmi? Cobine, do you want to share what you guys are doing in terms of monitoring out of Iceland to track to make sure that we're actually doing a better job with the climate than we're doing?
I am. Thank you so much for the opportunity. I'm Kolbjörn Hilmarsson, CEO, co-founder of Svarmi, and actually I want to talk about the sort of nature versus climate conversation. And allow me to share my screen, and then I should be able to get started.
Should be good. Take it away.
Great, thanks. So yeah, first I want to start out with the notion of nature versus climate. Of course, the two are heavily interlinked, but what we see a lot happening is that companies have a strong focus on climate disclosures, risk management, and taking action, rightfully. But the fact remains that the majority of our entire economy is highly dependent or moderately dependent on natural ecosystems, biodiversity, water, and the list goes on. And if companies overlook these nature-related impacts and dependencies that they inevitably have, they can significantly increase the overall risk exposure they pose as a business. And because everyone loves talking about regulation, I just want to cite a few exciting regulations and changes we're seeing on the global criteria, where this is actually changing from a topic that we talked about for years, but nobody was really interested in talking to us until last year, and specifically December 2022, when the Global Biodiversity Framework got approved, and we were fortunate enough to be there in Montreal for it to happen, where we plan to protect 30% of this planet by 2030, but also think about ways to manage the remaining 70% sustainably. We're implementing new regulation at the EU level, where we see biodiversity emerging as a key reporting criteria as part of financial disclosures. We also see biodiversity coming in as one of the key contributing factors to companies' CapEx and OpEx be counted as green or not green as per the EU taxonomy. Very EU focused, but if we look at the global context, there is a global initiative taking place in defining the rules and sort of playbook for risk management and disclosure of nature-related risks and opportunities, which is the Task Force on Nature-Related Financial Disclosures. And we've been fortunate enough to participate in their work, and they've developed what's called the LEAP approach, which encourages companies to locate where they interact with nature, looking beyond only the point location and defining areas of influence where they influence nature and prioritizing those areas globally before taking further steps to evaluate how they are dependent on nature in those areas, as well as how they're impacting nature. And these dependencies and impacts are then turned into material risks and opportunities to be acted upon internally and reported as part of financial disclosures. The TNFD recommendations will be released in September this year, and we've been fortunate enough to pilot the framework together with our client Anheuser-Busch InBev, the world's largest brewery. And through the work with them, we've been iterating a platform we started developing many years ago to support the digitization of environmental impact assessments for energy companies when building new infrastructure. And what we've been focused on doing is helping companies like AB InBev define their areas of nature influence beyond just the point level of where the breweries are located, and creating a stronger relationship between the impact drivers, the water use, the emissions and other factors, and the changes to the state of nature. And this then further helps them to narrow down and focus their resources on addressing the biggest risks, as well as the opportunities where they can improve nature with their own actions. The platform is built upon, as mentioned, years of experience in applying data from multiple sources, including satellites, drones, ground sensors, as well as global databases on protected areas, key biodiversity areas, and other factors. And we focus on commercializing this as a software and analytics as a service, and focus on working with larger enterprises that are more prone or susceptible to the new regulation falling into effect next year. And we price our solution based on the number of assets managed in the platform, as well as the level of support and the data being used into the analysis. And what we focus really on is bridging the gap between global analysis taking place at a very high level, and then knowing where to dig deeper into further analysis and real action at the local level. And that's why we also focus on integrating with other solutions that are rapidly emerging or already existing, as well as the existing services such as sustainability advisory, as well as the financial accounting. And we're not just an idea. We last year we generated $500,000 in revenue. This year we're aiming to go above 1 million in revenue, and we've raised a total of 3.3 million. And we're focusing our efforts in building a strong guiding light together with AB InBev, as well as our energy clients and infrastructure operators, including Enel and a list of Nordic energy companies. And we see a significant market opportunity, initially driven by regulation, but also the fact that this feeds into the pace at which infrastructure development of renewable energy, more sustainable infrastructure can develop, because the largest fear or risk of energy security is actually the time it takes to get the permit, based on environmental impact assessments being the largest culprit there. And what we're doing now is we have a safe setup where we have 900,000 euros committed, and we're looking for up to 500,000 into that, looking for a further lead investor into a planned equity round of at least 3 million to start Q1 next year, where we will move from founder-led sales into a more structured sales and marketing team. And
Time
also
is
Svarmi okay.
So you've got 900 committed. You're looking to do what, 1.4 then, or and then another three on top, another 3 on top of that.
Yep.
Awesome. It looks like things are moving pretty well, actually. Manuel, do you want to take it away?
Yeah. So you mentioned your customers are breweries and energy companies. So breweries or in general, who is your customer, and how does it come when you say, like, my business model again is by the number of assets? So is it like, hey, I want to build a factory, can you tell me how I interfere with nature? Or is it more like, oh, this is my ongoing business activity, can you tell me how it interferes with nature?
It is both. So historically, we have been very focused around the earlier kids, where they're planning to build something new and they need to go through a mandatory assessment process. Mm-hmm. There became much more interest in the ongoing risk management of existing operation with the new frameworks and regulation coming into effect. Mm-hmm. So AB InBev, I could see from your look that like, what's the connection between breweries and energy companies, and the fact being that we actually are quite sector agnostic in the way we apply the majority of our solution, but the market has not been there. And we've been working with the very sort of early adopting clients in the energy sector on an existing problem, which is the new, when you want to deploy new greenfield projects. But the ongoing reporting is a completely new ball game. And there we were lucky enough to work with one of the founding members of the TNFD, being AB InBev.
And then it would always be like, hey, do the monitoring of the site by, as you said, like number of assets. So an asset could be a plant, or an asset is like one I don't know, machine, or what?
Yeah. So sorry. Yes, an asset is a plant. So in the case of an asset, we reference each brewery is an asset, or each
factory.
Each factory essentially. Yes. Yeah.
AB InBev probably has, I don't know how many breweries, at least 3 or 4 around Munich. So yeah, okay.
They have a lot. And we're doing a global analysis with them at the sort of really focused on the former part of the framework.
Of the $1 million in revenue this year, how much of that is subscription, or is that like a consulting, like one-off fee?
Yeah, so what we're basically, last year we had 40-60% split, and this year the aim is to have that reverse, basically 60% from recurring and 40% from the sort of kickoff or like basically a consulting based. But basically what we see is that it's highly consultative at the start, and then it builds up basically, it becomes ingrained into their operation and they start collecting data there. So the strategy really is land and expand, where it's really supporting them as much as they want. Some of our energy clients don't want a lot of support. Some want a lot of support. And that's why we also differentiate our pricing and sort of our revenue generation based on how much they want us to get hands-on.
Can you walk us through the growth of your customers? Like, do you plan on going to banking or financial institutions that want to have climate risk data? Or do you want to stay in the energy space and more hardware, assets?
So we are not limiting ourselves into these two spaces for the future. But what we want to focus on is really building up a strong understanding of the process and moving beyond just a high level assessment as you would apply in the finance or insurance sector. And that's again to the competitive advantage is what we see. We've been ingrained into the super personal relationship for a long time, even though it has been highly project based. While a lot of companies that are being created now to address similar concerns are applying it very much at a global scale and thinking, how can I sell my platform or my data set to the banks and the insurance companies as well. So we actually think by focusing on the largest sort of project owners or basically the ones that are the companies that are most have the deepest relationship with nature, we can build the sort of strongest ability to have more precise, a better solution for these companies, but then over time, build up a database, of course, of more sort of context for what this could look like. And also there has been discussion around like interest from companies in knowing how they can collaborate more on some of the overlapping areas of influence.
Can you say a few words about how you get the data? Do you put a device on the plant? Because yes, you can capture certain things from drones, you can capture certain things, but either you plug into the automation of the factory, or you basically have your own device.
So we're usually not going into existing equipment in the core factories themselves. It's rather the surrounding areas that could actually be quite far away from the factory itself. So what it is generally primary data collection, especially for high priority assets that are being monitored closely. And that's where, yes, we might be using drone data from a local operator that's being tasked for it, or the client themselves, or there's a person walking the field, and instead of just making a note in a notebook, they actually make an observation into the platform. Or it could be a sensor that's mounted from like a third-party sensor with third-party like analytics on it that we are also working on integrating now, such as a camera trap that can detect which animal is which and sort of keep track of that.
Let's think about a hydro facility using or to produce hydro energy, and then you want to monitor how the fish is behaving, and which are getting killed in the turbines and which are smart enough to swim around, and how can I count that and stuff like that. Yeah. So that's actually a use case that we haven't really focused on until now. We've been more sort of on the surface and less focused on that kind of a water analysis. But the idea is, yes, to dig deeper also into the customer data they may already have, and that's actually how we've pivoted from being only a service or like providing it as a service, the data, and actually encouraging our clients to collect more of it themselves. Mm-hmm. If I may ask another one.
Yeah.
When we talk about your recurring revenue, how is it? Is it like per month per asset, or is it more like the data they collect, or is it then a seal you give them, like conforming with nature, or?
No, the last point we definitely stay away from. I mean, we are not a standard setter, and we intentionally do not give any seals of approval. But what we do is the typical recurring revenue comes from annual contracts where they subscribe to the contract with certain limitations, and these limitations are consciously set, whereby with more aggressive users they start meeting them. So it's an annual review of the needs there, and that's really like paying for. The initial clients and the initial version of the platform was much more generic from a data management perspective. But now in the sort of, as we further develop this and we have clearer rules of the game, then it's basically a more down to quarterly reviews of basically the needs of the client, but not much more dynamic than that.
If I can ask a question just about your competitors, who are your competitors and how do you differentiate?
Yeah, so there are a few solutions. Like there are a lot of solutions. There are a lot of solutions that feed into what we are doing. If we look at companies using Earth observation, we have a lot of great companies doing interesting things on the analysis side there, including RS metrics and various things that even have dipped their toe in the biodiversity pool. How we differentiate from them is really that we built a lot of scars in the sort of being a process focused company. So not just applying the technology and not going into an existing process, because a lot of these companies actually scrapped their biodiversity products because they were too early. but we basically persevered in the biodiversity in a very local market initially, and then started to expand. But in terms of the biggest competitor, I would say it's actually going to be pen and paper and consultants, because what we are dealing with is usually very, I would say, often old-fashioned things of doing. We've always done it this way, and that the trust in like implementing something so strategic as financial accounting or any connection of sustainability to financial accounting is not to go and run after some startups. It's really about like the consultants and the auditing firms that you trust, which is why we basically focus on coexisting with them and building a strong bridge between us and them.
Mm-hmm. And that
so basically, TÜV is your biggest competitor.
So yes and no. I would say like the biggest competitor and the prospective partners are the big four.
Yeah. Okay.
But could you be a sell-through to the big four? Like consulting firms are a great, integrator of technology. When I was at Deloitte, they did that for Salesforce and they did that for AWS. That could be a potential, way to get customers.
Yes.
And then kind of a different question related to customer or competition is carbon accounting is much different than what you're doing. But if I'm a company, I would only want one vendor to kind of do this environmental impact, whether it's carbon accounting, nature-based, how building a new factory, a battery factory, as we know, are building all over US and Europe right now, or really all over the world, are affecting my company, and then reporting. I would kind of all want that under one like umbrella and not have to use Watershed or Persephone and then you guys for nature-based. So how do you think about that as you grow and get, larger and more customers?
That's a great question. I think consolidation is inevitable in this market, and I think carbon accounting is quite crowded already in terms of the startup ecosystem. So our focus there is of course just similar to how we want to integrate with the services that the likes of Deloitte provide. We also need to focus on how can it, if the client decides we only want to use this platform, that our part of it can be fitted in as a module. But really, like where we see things going is that the giants looking at SAP, Microsoft, also have a very ambitious roadmaps in further integrating this into their portfolio. So we've actually focused more on the historical giants than the emerging carbon accounting software for a reason. And that's basically a bet on how we see, because sustainability reporting hasn't been regulated or almost not regulated for a long time, and now that's changing. And how we anticipate that will change the behavior of our clients is that they will be much more restrictive of basically, they want to innovate, but still they want to really go for platforms they can trust and also integrate this into their ERPs or basically the existing processes they have. So that's why we, similar to the big fours, we also think about the SAPs of the world.
What does big mean to you?
It means like if you can say the name of the software and like replacing it for the function, like Word. If I say Word to you, you think about Microsoft. So for us, like it's a very like we've just seen how clients in the category that we are targeting, they're very they've embedded the software into their business. So we don't have a single definition, and I'm not saying we would not integrate with smaller vendors, but I think like big is really just the big four. So if that makes sense.
You may have got your naming right then. Svarmi is not going to be a great verb. What do you see as the biggest challenge that you have going forward?
It's of course finding these early adopting companies. We've been successful now a few times, and we've of course built up a traction in our domestic market. But it's really finding the ones that are willing to innovate on this and are not just waiting until it's like pushed upon them. They're actually taking the steps beforehand, and then once it moves from something that we can manage in a sort of more founder-led sales team we really need to make the push into a more sort of structured outbound team that has more autonomy and less. And that's basically the point also of the fundraising is, of course, to be sure we can implement and scale with the partners and clients we already have, but also in being sure that we can take the step into a more functional sales organization.
Can you elaborate a little bit on why a brewery company has been among the early adopters in contrast to an automotive company? What was the reason?
So it has, in my view, it has to come from the top. So, and I'm not shaming any automotive companies here, but there has to be a clear drive for long-term thinking. And just with a particular client that we have in the brewery sector, we see that their CEO really emphasizes long-term thinking, and we see that executives are empowered to actually make long-term decisions and move into sort of into these longer-term projects, as well as we got introduced through their innovation program. So they are quite intentionally innovating and trying to apply new things. And biodiversity was actually, this was the first time they thought about biodiversity as a theme. So that's basically the underlying driver. But I think they of course have a significant dependency on nature, and that's something they had already realized. They depend on water. That's the largest dependency, and just they've already acknowledged that invasive plant species can take away the water availability that they depend on to produce their primary commodity. So I think that there was a clear relationship in looking beyond some sustainability initiative or a PR stunt and really seeing this as the material risk that it is.
Thank you.
And thinking also along AB InBev, can your solution apply to their suppliers?
That's the next step. And that's indeed like how we also envisioned like more scalable growth in terms of more viral elements, that the next step is actually looking at like how is the supply chain, and then making it easier to transfer this information, both if they have our platform and if they don't. So that's basically the next step, and the rules of the game are constantly changing and being defined, but that's something we'll focus on for the later part of this year and especially next year.
And Cobine, thanks for presenting. We got two more companies, so I want to make sure we keep the ball moving forward, so to speak. So, Alex, do you want to share Ourobio? I hope I'm pronouncing that remotely close to right. And what you guys are doing? Incredibly interesting company. Basically, let's go biodegradable for plastic. We kind of bring it all back together a bit.
Yeah, thank you, Matt. And we go by Ourobio, but as long as we're talking about it, I think that's a good place to start. Sorry, I always click the wrong share button. Can everybody see my full screen here?
Looking good. Take it away.
All right. Well, thank you everyone again for the opportunity. My name is Alec Brewer. I'm one of the co-founders and the CEO of Ourobio. And at Ourobio, we're using synthetic biology to help create the circular economy. We often start off by asking our audience to imagine what the world would be like without plastic. And at first thought, many people perceive a world in which we don't have a garbage patch the size of Alaska in the middle of the Pacific Ocean, or headlines like these coming out every day. But when you take that thought just a little bit further, you realize that we really could not live without plastics, or we could not live the life we do without plastics, that they're baked into our society and that they're essential for the quality of life that we live. But there's an inherent problem that we're trying to solve, and the single-digit recycling rates hit globally and particularly in the US simply aren't going to solve this problem. At Ourobio, our goal is to work with industry in order to adopt healthier and more sustainable materials, which can be used to replace petroplastics throughout the supply chain. We are developing a fermentation technology which uses industrial byproducts as a means of producing biomaterials, and we do so with the goal of helping to incentivize industry to adopt more circular solutions and the biomaterials which result from our process. We all know that now is the time for solutions like those which we've heard about today. As regulatory and consumer pressure continue to mount against the status quo, and as incentives and resources become more available to commercialize more sustainable technologies. And one industry in particular that we see in being in need of solutions like those which we're developing isn't just the plastics industry, but the plastic additives industry, which really serves as the backbone for functionalizing plastics into all of the applications that we know and rely on them to be in today. One class of additives that we see as being particularly important to the adoption and the performance of biodegradable of plastics is actually colorants, as over 85% of consumer decision making is made on the basis of branding and the marketing of products. So the first application of our technology that we're developing uses our engineered microorganisms to co-produce biodegradable plastic resins and colorants with the goal of helping to create more marketable and brandable biomaterials. What's even better is that we're using, again, industrial byproducts as a raw material, and we're starting with cheese and yogurt byproducts. The materials that we're first making, or the polymer that we're first making, is one called PHA, which is regarded as one of the more durable yet readily biodegradable materials, which can be used via traditional thermoforming methods independently or alongside a variety of biomaterials, and can be used in a really wide variety of industry applications. The reason that we're starting with whey as our feedstock is because there's a tremendous excess in the market, which continues to grow each year as plant-based protein alternatives continue to grow in popularity and sustainability relative to their whey alternatives. It's also really ideal for us because it allows us to partition the nutrients into producing both the polymer and the additives that we're producing. And in co-producing both the resin and additives together, our solution lends itself to an additional footprint reduction potential, enhanced batch-to-batch efficiency of the resin and colorant, and will help our customers not only better appeal to their consumers, but to offer or to better meet their sustainability goals as well. In implementing in the existing supply chain, we found partners both up and downstream, and are working with these partners not only to orient our solution or to introduce our solution, but to help use the materials to the best of the ability and to ensure proper management at the end of their life. Well, we are predominantly a B2B company. We do have B2C potential that we've begun exploring with plastic converters and brands. And in the year and a half that we've been developing this technology, we've demonstrated a proof of concept, are looking to pilot, have patented the technology, and plan to expand our pipeline from our blue colorants into a portfolio of biodegradable plastic colorant additives and eventually performance enhancing additives as well. We've got complementary skill sets and backgrounds in synthetic biology, biochemistry, and entrepreneurship. Our team is starting to grow. We've got a tremendous amount of support from academia and industry. And as we close out here, really appreciate your help in continuing to connect with partners, sources for non-dilutive and eventually seed funding, and even talking about our friends and family round, which we currently have open. These are supposed to be in the appendices, so I apologize for that. But again, appreciate the opportunity. I'm looking forward to everybody's question.
Awesome. Thanks for presenting. I forgot to give you the 1 minute warning, and you're only like 10 seconds over. So that'll be mark that off as a major win. While we're bringing everybody else in, how do you plan to reach your customers? I know plastic producers can be A, kind of slow, B, they've got kind of their systems and processes already in place, and they don't necessarily like to try new things until new things have been proven.
Yeah, excellent question. So I think a few things to cite are going back to what I said about the changing regulatory and consumer interests in the market right now, as to why now is the right time. But I think more important to recognize is that the materials that we're making have been around and used in industry for, well, they've been known about for 100 years and used industrially for 40 or 50 years now. So industry has at least some familiarity with them. There's been some reluctance to adopt them previously because there was a lesser concern for sustainability, especially when considering the trade-off for the premium of materials like those which we're making. But again, as all of those factors are changing, we're actually seeing plastic converters and brands proactively reaching out in order to help procure, in order to procure materials like we're making. So we've got several compounding partners and several brand partners, which were either formed or initiated via just kind of cold outreach on our part, or them actually even reaching out to us saying, hey, we heard about these materials, we want to test them out, and have started to work with them since.
How long does it, do you envision, does it take from like, okay, as you just described, hey, we discover you, we want to use the material, we test it, and then until it's like in serial production? How long do you imagine does it take? Because I don't know if you're already in a process with someone, if you can talk about it, because I think some of that stuff should be highly confidential, not only confidential, but go ahead, and then maybe you can share a little bit about that with us.
Yeah, that's an excellent question, and you're right in that it's a little challenging to answer because it's very much on a case-by-case basis, and some of it is confidential. I'd say the two factors that most determine the time to market are going to be the complexity of the blend and the product that you're trying to replace. I guess the level of material engineering that has to go into it, and then the access to material, which is going to allow you to iterate and get to that point. So that previously, especially as these materials are being introduced into a wider variety of applications, can take anywhere or has taken anywhere from 6 months to 2 years. Actually, a classic example of a PHA product that's been pretty popular but took I think almost 5 years to develop was a PHA bottle called Cove, which is now on the market, has gotten a tremendous amount of interest. And so, yeah, it's going to be determined by again the complexity of the product, maybe even the size of the product line as well, because with higher throughput product line, you're going to need a higher efficiency, higher efficacy of the material. But then as it relates to us and what we're doing, part of the reason that we are engaging with brands going a little bit further down the supply chain right now is because it allows us to start working with material early, in order to de-risk the product market fit, in order to actually even then create interest and demand for our product. So de-risk our own business model. And that so far has been pretty successful. We're about 3 months in to 2 different projects and should be kicking off another in the next month or 2. Those will probably extend out another, as I said before, about 6 months to a year for each of those projects. So sorry, I can't give any super specific information here, but that's kind of the approximate timeline. And then as was talked about a little bit earlier today, some of the AI tools for material synthesis, compounding, and formulation that have hit the market that we're familiar and pretty well connected to are also helping to cut down the number of iterations and thus the time to market for some of these materials. I could keep going on that point because one of the things that we're also doing is building a biomaterial database in order to have another asset in-house that we bring to the table in these material development engagements. But that's a bit of a side piece to our business model, or the value that we bring into these relationships.
Cool product that you're building. What's the price point, I guess, at an industrial scale compared to virgin or bioplastics?
Great question. So,
or compared to the additives for the coloring.
Yeah, I was gonna say I'm gonna try it. I'm gonna throw a couple numbers at you, and then I'll distill it down at the end. Right now, the price of raw PHA resin at the industrial scale, so ton scale, goes for somewhere between $5,000 and $10,000 per ton. That's about 2 times that of the about 1.5 times that of the leading biopolymer, which is PLA, and somewhere between 2.5 and 5x that of petroplastics, depending upon which material you're talking about, virgin or recycled, right? If you are thinking a little bit about sustainability, and also the prices of gas and oil, which we've seen fluctuating tremendously over the last couple of years. So the base resin is again somewhere in that 3 to 5x premium range. Across all materials, when you have a color concentrated material, the premium is then typically 1.5 to 5x that of the raw resin. That range will be determined by the concentration of the colorant as well as the other additives that you're using to create whatever your master batch or pellet is. And so then kind of doing some quick math there, the price of our colored resin is somewhere in the ballpark of, at a low end, about $12,000 to upwards of $40,000 per ton, again, depending upon concentration and other additives used. Just to then work it backwards, that comes to about $20 to $25 per kilogram, which we have affirmed as being cost competitive with some of those compounding partners that I'd mentioned before.
And you can then use your bio-based colorings with normal petrol-based plastics as well if they want to partially decarbonize normal plastic.
They can be, yes. That's something that we are still thinking about internally in terms of whether that's something that we want to allow in terms of the use of our material. We do have some pretty strong interest from plastic recycling groups and groups using polypropylene in their bioplastic blends. But I mean, a large reason that we're doing this is to cut down on, if not eliminate, the creation of harmful microplastic pollution. And where, you know, I think the verdict is still out on whether combining biodegradables with synthetics is going to lead to that, or is going to help to increase surface area and allow those petroplastics also to degrade faster. So could be, but you know, I think internally we're still figuring that one out.
Just so I can get clear on this, so even at the commercial scale, you're going to be much more expensive than the typical plastic product. Okay.
That's correct for the time being. I'd see until you see a more drastic regulatory change or shift in incentive structures. But if you are to remove that from the equation right now, like if neither petro nor bio-based had any incentives, had any tax cuts, they're actually quite competitive already. There is definitely going to be, there's going to need to be regulatory change before you see full adoption of biomaterials, but really one of the leading bottlenecks or one of the bottlenecks in the biomaterials industry over the last couple of years hasn't been price so much as it has actually been the access to the material, the quantity of material on the market. So demand has been quite high despite the premium pricing. And I know we were talking about industrial volumes, but that can really be seen most at of course the benchtop or kilogram scale volumes, where you're seeing material go for upwards of $40 or $50 per kilogram, and that's just the raw resin.
Do you guys need to build your own factory, or can you fit within your customers? Like and then how do you plan to finance all of that?
Excellent question again. Really, there's probably three scenarios, all of which we're modeling out right now. The first is contract manufacturing, in which we do have a pretty standard bacterial fermentation process, so we can pretty easily contract it out to pilot facilities. We're speaking with all of the bioeconomy institutes in the US as well as the national labs right now about contracting out our first pilot runs to one of those groups. The second and third scenarios are a little bit more similar, where we are developing our own infrastructure. In one scenario, it's a more centralized kind of factory that we're building, or retrofitting a factory in order to send our raw materials there and process. Or I guess the third is that we process on site, where we locate a small reactor on site at a creamery or within an ag hub, and with a relatively low footprint can produce our materials on site and then ship them to a converter or to a brand for their processing and use. So the likely progression is that we're going to first contract. Again, we're having those conversations right now. We're fully modeling out and have begun pitching the pilot to our partners to help finance. And then from there, we will probably go on to either construct or retrofit our own infrastructure. And we've done some modeling about that as well. And that's, well, I can tell you more about our seed round that we're planning if you'd like to hear more about that budget.
Yeah, so you mentioned a family and friend round. Is that a seed round, or is this like, let's raise money to get started and then we'll raise a seed in 6-12 months?
It's more of the latter, but not fully either. It is like, it's a bridge round. We had a lot of friends and family that were interested in investing, and so we kind of created the vehicle for them to do so. We've been pretty successful with non-dilutive funding, though. We've brought in about $450,000 in non-dilutive funding. We have taken one check from a strategic investor, the Heritage Ventures Group, in conjunction with participating in their accelerator. And
oh, we lost your voice, Alec.
Can everybody hear me?
Sounds good.
All right, sorry, my phone decided to jump in and try and take the mic. Yeah, so I was saying the friends and family round was because we had friends and family interested, and strategic check, a bit of a bridge. And is this still happening? Can we?
No, you're good. You seem to be good now.
Okay. I'm really sorry about that. And so it's a bridge, and we're applying for another $1 million in grants right now through the EPA and through the DOE. And then depending upon the success of the friends and family and those grants, we'll go ahead and raise a seed round to build our own pilot infrastructure, probably right around the turn of the year. So we're also gently looking, I guess gently is not the right word, but we're gently starting to look for a lead for that round as well.
Got it. Awesome.
Manuel.
Manuel, you look like you want to say something.
Yeah,
Or
sorry. Can you say a word about commercialization and business model? I think it's not the point here, because you would sell it by the ton or by the kilogram or whatever. But like, how do I have to imagine it? So you said, like, I'm going a little bit further towards the customer of my customer to have a better understanding, but like, how does it work with your customer? Who is your customer? Is it then the producer of the materials, or?
Yeah, there's kind of two modes of adoption. There's from the converter, so the group that's working with doing all the formulation and compounding of materials to give them certain sets of properties. And then there's adoption from the brands, so a little bit further downstream, who will then select a material or a certain set of properties that they want, and then pressure or instruct their converter to go out and find the materials which are going to suit their needs. And so our model really looks at both, where we are looking for converters who are proactively looking to adopt biomaterials. That is, those who have come up purely in the biomaterials movement, as well as the more traditional converters that are looking to get ahead of the curve, and be that for regulatory reasons or their own mission. I think very much like the example of ABM being a leader in the space. We're trying to work with those like-minded converters. And then again, the brands that are early adopters of biomaterials that want to get them into their products, or at least into their demos, and then we'll then again work kind of in our favor with their converters to say, yes, we need to start using this. These are the constraints that we have, and work with these guys, work with Ourobio to do so.
Thank you.
And guys, we have one more company that I really want to get to pitch, because I love traveling and I feel like a terrible person when I do it. So we've got some electric aviation on here. Alec, thank you for coming on for pitching. I hope you guys get a ton of interest from the program, but I got to move things over to it. The other name I'm going to get wrong. Isidoro.
You did great.
I got it for once. Isidoro with Dovetail. You want to share how you are trying to greenify the skies?
Yeah.
Thanks for the opportunity, everyone. Appreciate the questions.
Okay. Well, can you see my screen?
Yes.
Okay, so first of all, thank you for inviting us and for giving us the opportunity to show you Dovetail. My name is Isidoro Ruiz. I'm a business operation director at Dovetail and partner also this company. So this day we're living a revolution in the aviation industry. I'm sure you're aware the fuel prices are increasing, and this is driving up operating costs and having a massive impact in the aviation industry. We need a cheaper solution, of course. Also, short flights are being made in some part of the world due to the emission. We need a zero emission solution too. You probably know many of these planes that are here in this slide. Currently there are more than 100 projects in the world that are claiming to be the perfect solution for zero emission flights. These are brand new aircraft that will cost billions of dollars and decades to develop and certify. Dovetail is focusing on a potential $80 billion market based in the retrofit of existing aircraft. Our initial product doesn't cost billions of dollars or decades to develop. We bring it to the market and create revenues in 3 years. Dovetail ideal customers are early adopters in the aviation industry. Mostly tourist operators, skydiving, scenic flight, island hopping, that they will have a range up to 100-kilometer flight. And then we can extend this range up to 500 kilometers to allow to connect the cities when the hydrogen fuel version is already put in place. And this retrofit approach will decrease operating costs by 40%. This cost saving mostly came from the use of electricity instead of fuel, and also much lower maintenance costs. NASA did a study a few years ago that if you reduce operating costs by 40%, you can increase the demand by 10, making viable thousands of routes that are not viable today, opening up new markets. Dovetail objective is to achieve the electrification or a commercial aircraft for near emission in 3 years. We are using aircraft in operation that are already certified. We will only certify the replacement of the combustion model by a new electric power plant, integrated by the electric engine, battery packs, and hydrogen fuel cells. This retrofit approach is the quickest way to market. Dovetail will save time and money by modifying the current existing aircraft and replacing its motor. We're starting an $80 billion market, assuming that half of the 16,000 small aircraft that need to be replaced or retrofit in the next years. Then we will multiply by 10 our business by aligning the new build market when the technology is viable to produce a sustainable range required for larger aircraft. That will turn Dovetail in a multi-billion-dollar company. Our goal is to fly for the first time in 2024. In the last 3 years, we have accomplished some milestones that are driving us to this goal. In 2021, we secured the supply of the engines. Magni-X is a world leader in the electric engine, and they are on track to have the first model certified in 2 years. Last year, we secured our first order with Monty, which is a lessor with global presence, and they sent an order to convert up to 50 aircraft with a value of $110 million. Also last year, we secured our first European investor, Ochstein and Boulder, which is Spanish Airlines. At the beginning of this year, we did a first demonstration of our technology using a ground rig to simulate the complete electric system. And also, we received a grant from the Australian government for $3 million. A few months ago, we also secured our lead investor, Rex Airlines, which is one of the largest airlines in Australia. And as part of the investment, they're giving us an aircraft to convert to electric. We have a great team with highly experienced technical expert and successful founders. We have a large experience in electric aviation. David Dorado, CEO and co-founder, is an aerospace engineer with over 25 years of experience. Aaron Sean is also the founder of Sydney Seaplanes, the largest seaplanes in Australia. Ron, Roy, Susanna, Michelle, we have a lot of experience in electric aviation companies and innovation activities. From the operational side, besides David and myself, we have a talented team with a lot of experience in electric aviation. We opened a seed round of $7.5 million. Aviation companies see the trends towards zero emission and cheaper operating costs, and that's why they already fill half of our investment round. What we need is to fill the additional $4 million and deliver the aircraft conversion, accessing the $110 million committed revenue. Finally, I would like to summarize the 3 points of Dovetail proposal. First, we can reduce operating costs by 40%, opening up new markets, and this can be amortized in less than 3 years. Second, Dovetail proposal is 100% electric. There is no need of fuel, and we can abate more than 3 million CO2 tons in the next few years. And finally, we are on track to get revenues in 3 years to open multi-billion opportunities. Thank you very much for your time.
And thank you as well. Let me pull in our investors. That was quite prompt and on time. Let's see, Manuel, Jinna, do you want to go first while I'm bringing everybody in?
Yeah, sure. Thank you for that. I think that's very exciting that we are trying to develop electric airplanes. Can you speak a little bit about safety? How people probably will be concerned about this topic.
Sure. First thing we need to think is we're talking about one certified and in service airplane. Okay, they're already flying right now. So we just planning to go to certify the replacement on the combustion motor for a new power plant. That will reduce significantly the time and the cost for the certification because we are going to go after a STC, which is called Supplemental Test Certificate, and that will reduce a lot the modification to put in place in the aircraft. We don't plan to modify anything in the structure, just to allow the integrating of the electric engine. So for the envelope on the surface and the structure of the aircraft, we aren't planning to do anything.
Okay, so there's no change on kind of actual risk of plane crashes.
And also, aviation is a very, very tough industry instead of certification. I know, Manuel, you probably know about that because I know you're laughing at, but at the end, so we need to follow strict regulation from the regulatory body, EASA in Europe, FAA in the US, and CAS in Australia. Which for the first time we are working and we're in contact with them we already present the certification plan to them to make sure that we are aligned with them. At the end, it's a very tough regulation. We need to be very close and aligned with them from the beginning.
Okay, great. And what's the ROI for the aircraft operator?
I'm sorry, can you say that again?
The return on the investment.
We're 3 years, because one thing is very important. So a combustion engine needs to be replaced after this kind of a combustion engine after 3,600 hours. So the electric engine can extend by 3 times the life. So the operators can amortize this investment in 3 years.
Do you need backup batteries?
Yeah, we are running right now 2 projects. The first one is a battery power aircraft, which is the Cessna Caravan. It's a 1-engine aircraft by 9 seats. That will be a battery version. With the battery version, the range is very limited, up to 100 kilometers, because of the density, the energy, and also because of the weight. So that's why 100 kilometers is the maximum that we understand. We estimate that it could be like a good alternative. Okay. There is a niche market for this range. Like I said before, like scenic flights, skydiving, and island hopping. They are with this 30 minutes mission. they are comfortable and they could be very, very competitive with the standard, with the traditional aircraft. And also, like I said before, in some parts, they are also being paying all the CO2 emission flights, so that it would be a good alternative for extended flights in, with the environmental issues. They will not allow to operate in the future CO2 emission flights.
Is my understanding correct that your customers already have the planes? You provide the retrofit to make them electric.
That's
that, and then they operate the planes, and you have no more like connection to the plane. So or do you have revenue after that? Do you provide?
Okay, so you're right. So we receive, the operator is the owner of the planes. We will retrofit them, okay, to become to electric. The one thing is we will be the STC holder. No one can retrofit this aircraft without our permission. So we'll be first the ones that are allowed to do this certification, model by model. We're working with different platforms, and finally, all the maintenance should be on us, because we have an agreement with the engine manufacturer, and we will also provide the maintenance of these electric aircraft.
And what type of batteries are you using, and who are your suppliers?
We are talking with different suppliers. We are also close to sign an agreement with some of them. We are for now. We are talking with the ones that are close to commercialized battery packs for the aviation. But we're developing on our system, because we understand it's a key element for us to be able to be the owner for these batteries. But one thing that I would like to mention is the battery version will be the first one to try to be the first, or one of the first to certify the aircraft. But in our plan, we are planning to upgrade this power plant with the hydrogen fuel cells. That will allow us to increase up to 500 kilometers the range of these planes, because that will be a more competitive solution. But it will take longer for the certification point of view to be able to certify the hydrogen aircraft.
Yeah, because you need to be a little bit longer when you look back at this at the years of the pandemic. The thing that mostly increased was private jet flights or private air flights, and they skyrocketed. So you need the 500 to 1,000 kilometers. And then you turn these 19-seaters or the Cessnas or whatever into what they would be like CO2 neutral means of travel. So you should also look at Norway, because between Bergen and Oslo, it's the most frequented regional flight that is ever happening in the world. And I know that they looked at solutions for electrification, because basically they have a regulation in place that says regional flights within Norway can only be done electric or CO2 neutral by 2040, I believe. And very interesting. So when do you want to fly? 2024?
That will be a demonstration flight, okay? Because as I mentioned, we are working in two projects. The plane that I have behind me is 2 engines, 19 planes. It's called the Kinnair, and we are planning to replace just one of the engines for the new power plant to start working in the demonstration flight. But we are planning to have the battery pack version certified at the end of 2025. Because at the end, the power plant, in a sense, is the same. We just need to upgrade the power plant with the hydrogen fuel cells to increase the range.
I have a question about how do you plan to scale, rather on the installation front? Let's say you're operating in the Australian market now, and if you're operating somewhere else, how does that look like for your operations?
Okay, so we're focusing developing and certify this technology with these two planes, but we are planning in the next 4 or 5 years to open a conversion center to be able to retrofit those planes. We have 2 sites, Australia and also Spain, where I base. So our plan is to use Spain as the door for all the access to all the European market. So we're planning to open 2 centers, one in Australia, one another in Spain, to be able to cover those markets, the Australian Pacific, the Asian Pacific, and also the EMEA market as well. And in the future, we plan to become an OEM, because we are planning to develop our own aircraft. But we understand the retrofit approach will reduce significantly the investment and the time to be in the market, and also will allow those technology, the battery and the hydrogen technologies, to become more mature, and to make sure that once we are going to design and develop a new model, that those technologies are mature enough to make sure that we can reduce the risk.
Like logistically, how would that look like? Like you bring the retrofit engine to the plane, or all the planes go to a hangar and then you work?
Yeah,
on...
we will have like a factory, retrofit factory, we can call it that way. And the planes will come to our pulse line, and they will start as a conventional plane. We'll have a factory to replace the combustion motor, to introduce the new part, the engine, the battery packs, the fuel cell, all the avionics and everything that we need put in place. And we will do all the testing and certify that. That will be the process. But we'll have those let's say factories, first in Australia and Europe, and they were planning to open in South America also as well, in North America.
Is it a better business model to do the retrofitting, or to do almost a franchising of the retrofitting model, so that you let others come in and do it for you? Because it's a lot of consulting, and then you want to become an OEM after that.
It's a very good question. We already discussed about that, originally internally. I mean, we first want to be the owners, but we can franchise, because at the end we'll be the STC holder. We can allow others to do this retrofit and also to do the maintenance for those aircraft. At the end, those aircraft, they will never have like a very large range, and we will need like a closer maintenance center to be able to to attend those aircraft. So franchise is something that we have in mind. Actually, we're in conversation with different MRO companies, maintenance companies for aviation operators, and to try to develop this business model as well.
Yeah, it seems a lot faster, easier, and more scalable.
Yeah, I agree.
How do you look at helicopters? Would that be an option, or?
Yeah, we already talked about that, because of Magnies is our electric engine manufacturer. They're already working in helicopter sector as well. So this could be an option, but right now we are focusing and developing this technology for different platforms, because at the end you need to certify each platform. It's like a car. You need to certify like a Audi 4, Audi 8, BMW, whatever. So each model needs its certification. So we're focusing the 9 to 20 seats with the 4 or 5 platform with they're the best seller in the world, and then we will plan to up to 40 seats. Helicopter can be an option for us, but right now we're focusing in the regional aviation.
And what type of batteries did you say they are?
It's lithium battery.
Isn't lithium pretty explosive and not allowed on planes?
I mean, there are already B6 aircraft is already in the market. It's the Pipistrel. Obviously, there are a lot of safety around the batteries or thermal runaway, and they will be testing a lot. It's one of the challenges one of the challenges of this technology is to be able to be certified. But for the battery point of view, there are a lot of projects that are running right now in the world. It's a very more mature technology, so to speak, compared with the hydrogen. And at the end, the batteries that we've been tested for so long to make sure that to reduce the risk of thermal runaway.
Awesome. Any last question, folks? I know most people are Europe based, and we're 10 minutes over, which means you're hungry and wanting dinner.
In Spain, it's a bit later, so we still have time.
Isidoro, say hi to Susana the next time when you speak with her.
Okay, I will. Okay.
She's my former boss, so.
Really?
Yeah.
Okay, I will let her know.
Let her know.
I guess I have one final question. You're raising 7.5 million. That's to get you to which milestone, and how much more do you need?
We still need four more millions. Okay, we're in the C round. This will allow us to develop and certify the battery packs version. Okay, that will be our first step. Then, like I mentioned, we're planning to open a Series A round to get funds to open our first factory for retrofit. That will be in around couple of years.
Great. Thank you.
Yeah.
Thank you very much.
Thanks for sharing this, Isidoro, and thanks everyone else for coming on, presenting the companies. Now we transition really into the last segment of the show before we the startup tank, where we choose our kind of climate startup of the night. Before we do, if you guys haven't checked out our site and joined Climate Techies, we've got 2,000 plus folks in WhatsApp and Slack. Might even be 2,500 at this point. One of the best places to meet and connect with other folks, be that energy, plastics, recycling, circular economy, whatever, what you have at 4WARD.VC, the number 4WARD.VC. We invest in companies that move the world forward. And you can find out more about us and how we do that with our partner in Clime program at 4WARD.VC/Accelerator and all of our other free goodies. But this is the last segment of the show. This is where we choose a little bit of consensus on who the most interesting company of the night was. Who do we want to talk to? Who do we think has real big upside and potential? Who we'll be hearing from in the coming years? Manuel, Zoom decided to put you as number one, so you get to go first. Who are the top 1 or 2 companies that you were interested in and why? Let's see if we can find some consensus.
I'm not sure. So from an investment perspective at Greencode, I would probably go for Svarmi. But then I have to say I really like what TerraWaste is doing. So Alia, that's really cool.
And Jinna, you got the bad luck of being second.
Yeah, I think my personal favorite is concrete.ai. Yeah, and then I already talked to Aya a lot on TerraWaste, so I will say that's my very high second runner-up.
And then I got third position today. I liked TerraWaste as well. I found that one very interesting. I like concrete.ai because of what they're doing for decarbonizing the built world, but I'm not sure if and how scalable that's going to be with other players in the space. And then Ourobio I found interesting. Probably TerraWaste being number one, and then Auro and concrete.ai being number 2. What about you, Schaffer?
I was also a fan of concrete.ai. I think not only the carbon emissions aspect, but if you could help, current concrete manufacturers, better performance. So like non-climate at all, that you can really, expand who you can sell to. I think Boulder is very interesting. A couple of reasons. I currently am in Boulder, Colorado, so that's kind of a side note. But I think the virtual power plant model, that's still being figured out. And, if you have control over thousands or millions of homes across, whether it's countries in Europe or states in the US or really across the world, that could be a really powerful software-based, high margin business.
Interesting. So it looks like we got a bit of everything. I think the consensus is there's no consensus on this one. It was a pretty good lineup all around. I gotta say this is one of the better ones we've had so far. Do we just kind of say everybody good job and hopefully VCs reach out? Any thoughts?
Well, we could say it like that, but we could also say like we are helping them to reach out,
It looks like Maddie from Boulder is adding TerraWaste to her vote, so she doesn't really have a vote, but we'll give her a vote anyways. Sorry, Maddie. Maddie. Sorry, not her. Him. Name. Sometimes it's been one of those days, folks. Anyways, TerraWaste. It looks like we'll give TerraWaste a slight nudge over everyone else, because if we can get rid of plastic and get rid of more oil, then that I think is a win-win-win-win all around. Guys, everyone, thanks for tuning in. Thanks for sharing. Thanks for pitching. I know it's kind of terrifying. We also had a great turnout, so you were pitching to an even larger crowd than usual. And thanks to our panelists for coming on and helping. Where is the best place for people to reach out and learn a little bit more? Schaffer, you can go first.
You can reach out to my email, which I can put in the chat, or climatecapital.co for our company's website.
Awesome. And Manuel?
Go on LinkedIn. Manuel Heckmann, or go on the website of Greencode.VC, and you should find my contact details there.
And then Jinna?
Yeah, and my LinkedIn is Jinna Lee. My last name is Lee. But yeah, if you want to send me an email, you're welcome to. And there is jinna.mairlot@gmail.com. Very confusing, but there you go. You have all the ways to get me now.
All the ways. And if you guys want to find out more about us and what we do, you want to apply for an upcoming session of the Startup Tank, that's just thestartuptank.com. We do that every 2 weeks, Mondays, 5 to 7 p.m. 2 to 3 climate VCs, 5 to 6 awesome climate startups, pre-seed to pre-series A. Go on there and apply. If you're looking for a partner in Clime, so to speak, you're looking for someone to help you grow, scale, land some pretty serious customers, clients, pilots, so that you can ultimately prove out your tech and raise your round. Check out our partner in Clime program. That's just 4WARD.VC. You'll find more details there. And if you're looking to raise, we've got a database of 900 plus funds, incubators, accelerators, and CVCs focused on climate and clean tech. You can get that all as well there, just at 4WARD.VC/VC database. You'll find everything there. Our climate techies community, great place to network, lots of other good stuff. But now we're 17 minutes over, and some of us are in Europe and Hungary. So I'm going to say goodbye to all of you and have a great one and a great night.
Take care. Bye-bye.
Yeah.
Thank you.
Cheers, folks.